Hi and welcome to the market alert for Tuesday the 20th of July 2021. So fear nears 2020 highs as stocks, bonds, yields and crude crash. The last time fear was this high, the S&P was down 40%, and that's when the global pandemic appeared and we had the global lockdown and shutdown of the economy, which we're not going to see again, hopefully not anyway. And of course the only thing that really could affect the stock market is a rate increase and also the end of tapering, which both are possible, I suppose. Now, yesterday we saw the market move sharply lower. The implied volatility went from 1443 to 1718, which is a significant increase, but nothing major yet. So there could be more on the downside with regards to this correction. Just a reminder from yesterday, there is no news today, as there wasn't any yesterday. The market's got to make up its own mind today, which direction it's going to take and whether it's going to continue to the downside as it did during yesterday. So let's start off with the Dow. We can see this moving sharply down yesterday, straight through the 34,110, which is the support that it saw here. And then from here to here, drawn back, you've got the 62%, the 78 and 89 where the market could move down to. But certainly a lot stronger than the German Dax. But if we have a look at the 30-minute, get a sort of step back, have a look at a bigger view, we can see that the pajama traders came in very early yesterday and just moved the market to the downside. We want to see how much it's moved down. Well, down to this low. We're 793 points for the Dow. Meanwhile, in the German Dax, which looks weaker than the Dow, we can see this too moving sharply to the downside. We took out all of these levels here. I'll cover those in the second part of the market alert where we saw this in real time. But the market trading down from here and here, both drawn back up to here. And you can see we've got an interesting point there, which is also at the low, and that's the 89% and 78 as well. Again, in the bigger time frames, intraday ones, you can see the 30-minute there moving from the off, trading down until just after, just before. Is it 10 o'clock? No, I was still going to say it should be the whole day session in this white piece here. Yeah, until 4 p.m. and then the market getting a bit of a bounce there. Trading through the S3 as well, which is unusual, but went through 150 points again, which is unusual. But then when you look at the daily chart, you can see that this is unusual. This is a very big bar to the downside, probably one of the biggest we've seen for some time. But the market finding that bit of support at the moment in the daily, and this can go one of two ways. I know it sounds obvious, but when you see this first thing in the morning, you'll get the same on the upside as well. When you've got a really big bar, the market is sort of like, well, which way are we going to go? So the low obviously is going to be very, very important, and it is at that 89%. I forgot to mention this when I was just looking at the daily. Alternatively, you will get that sort of inside bar that moves back as they try and ramp the market back to the upside. So let me just cover this with a bit more detail. There's your upside targets from the high to the low projected back, 38 obviously being the first. But what you can do here, I'm just going to remove this because this bar is so wide in range. You can actually just click twice on the top of the bar and it will actually show you the fibs for the range of the bar, which gives a more accurate indication because of the size. So as the market starts to make its way back, you can use all of these fibs here as resistance areas combined with what you're seeing in the intraday time frame, you know, the DP, the R1, the high, etc. So, and also the BRNs in between. So it's a very useful tool to use in order to pick those upside profit targets there. Just have a quick look at the 2 minutes, see what's happening overnight. There was a bit of a sell-off there, 70 points at 4:30 this morning. But on the whole, the market was moving up towards the DP and then move back down, but has managed to get back above yesterday's close at the moment. And again, starting to see a bit of volume appear there. We've got the futures market kicking off in 15 minutes as I record this. So let's move on to the metals. And this is very interesting. As I mentioned yesterday, silver looked weaker, and sure enough, bang on the dot of where are we? I'm just trying to find the chart for you. We'll go with the 15 minute. We see it moved down in the mornings. Well, it was quite stable actually throughout the morning, and then as soon as the COMEX opens, down we go. We get an 89% retracement, and they try to bring it back. It's the same pattern. If we go to the 60 minute, you'll see this all the way through. When the COMEX opens, it's just jumps out on the chart all the time. Let's go back to the daily. And we can see that we're heading for the 2464, 78% as well. 25 is very important. I think it's going to be broken. They're going to head the market down to this 89%, down to $24 for my money. And it's curious to what's going on, because you look at gold and it's not even moving. Now, there is a thing, if you're not aware of this, called the gold-silver ratio. And I'm just going to go back to here and show you this. And you will see why what's going on here. So the gold silver ratio is the number of silver ounces to 1 ounce of gold, and you can see here at the moment this moving back towards the upside. But let me just squeeze this up a bit so you can see last year we got to 124 ounces of silver to 1 ounce of gold. And I loaded up at this point with the bullion dealers because it was, historic highs. And then we saw the market come all the way back down to 62. And this is nowhere near the lows of where it should be, because according to industry experts, it should be around 20 to 1, which we haven't seen now since June of 1980, 17 to 1 there. Now, what happens is this, as we saw last year, and I was able to pull out 500% return on some ETFs that I had, is that you'll see the gold-silver ratio come back very, very quickly into line. So down to, let's have a look here, we've got the 2011 there down at 32. And the underlying silver price, the gold will get a switch where the gold will actually stay the same, and silver, if I can find the charts, too many charts here, will accelerate to the upside. Now, given that we are seeing massive inflation in the US, the highest on record apparently since 1980, what is going on in silver is beyond me, apart from utterly blatant manipulation of the price by the banks, which we know throughout the last 20 years. They've been fined over $1 billion, and they're still allowed to carry out these antics. It's just beggars belief. But anyway, from a technical point of view, that's what you're looking for, is for the gold-silver ratio to turn around and move and accelerate, which will see the gold price stay static and silver play catch up, which it always does, but we're just going to be patient with that. You can see where it happened here, and we saw a brilliant move last year as the gold-silver ratio came back from 125 down to 70, and ever since then it's been moving sideways and now to the upside. And again, that's borne out by what you actually see in the gold and silver relationship at the moment. And of course, this isn't helping either, considering inflation is going up. The dollar is also going up, and I suppose on the prospect that Powell said a few weeks ago that he was going to increase interest rates within the next 2 years by 1/4% on each occasion, but it was going to take 2 years to do it. And it just goes to show how fragile the market is. It's complete and utter BS when you start to take it all apart and you look at it in a bit of detail. Anyway, let's move on to the inner workings of yesterday's trading session, and it was fairly quiet in the earlier part. Then the futures market opened, the market trading sideways. And then we kicked off, and I'm going to move forward through this quite quickly because I want to move on to the signal that was generated. I was playing the game in between though, with the market coming back towards the 20 bar moving average and the failure to close above the BRN as well. So you've got that weakness that you can sell into, and then let's just fast forward through to the signal. So we saw the market top out here at 89%. I'd already drawn this in. I was looking for the market to find some resistance, and it did. There were two 89s, and we then had the market moving to the downside. And I want to see the daily charts in this. We all know what happens, but I wanted to show you how the daily chart was really important. In fact, let me just wind back because you'll see how I used the daily chart earlier on as well. I can just find it. Should record two separate screens if I had the space to do it. There you go. So the 89% that we drew up in the market alert yesterday morning was already trading at this level, and then we've got these other 2 points, and then we had to move over to the left of the chart as well, which you'll see in just a moment. So let me fast forward back, and there we go. So we can see the market continue to move the stop to break even as prices have gone through the S2. We can see them buying back here, and what I did, the orange line on the chart here, let me show you how I put this on the chart, or why I put this on the chart. Go back to the daily again. See if I can pick it up. It's in here between all of this, because once we got to this level I needed to know where we were going once we broke that. So I've drawn that on. There we go. Right, so it's this level here. That's what I was looking at, because we've taken out the 89, we've taken out the low of this one, and then we're heading down to here. So we're just moving back and forth between the two, and we can start to see that we're at this level now, and again we're just trading through it, and I'm watching closely. We're sitting at 77 points there, and then watch the volume in this bar, and this was the key. We got to this level, which we've taken from the daily chart, and this is why I keep banging on about bigger time frames and using them, and then coming down to the smaller time frames to trade and time it. And you can see huge volume and a tiny bar there. Now the market, I think, if I'm correct here, after 80 points, the market then moved lower. Obviously I didn't have this in the right place, I've just moved it to the correct place. Prices traded sideways. Yes, they did. Yeah, I thought they'd moved a bit lower again. And then you see them buying back at the BRN. And let's fast forward through. Again, you can see a double bottom there. And then we had another move to the downside through the before lunch, which you'll see there. And again, I was sitting at the desk, but I was preoccupied with some other work, unfortunately, but I then drew in these levels here, which we'd already gone through, and I've moved to the other side of the chart to pick up these areas here. Now, it seemed a long way off at this point, but watch how the market unfolded down to these levels that you'll see in just a moment. You'll see periods where the market finds buying and it bounces back up to the 20 bar moving average. We're now heading to the 78. Even when I was watching the daily chart, we accelerated down to that level very quickly as prices then found a bit of support at the BRN, failed. And this is the pajama traders coming in and selling the Dow. The bulk of the Dow down move was done by the pajama traders, just rolling out of bed and in front of their computer screens. So now I'm looking just to see if the market's going to find support. It doesn't. It breaks the 89, continues down, and as we get ready for the afternoon session, we've traded down to 89% in the daily, and then we're off to the afternoon session. And this was interesting because the market had traded back through these levels here, and these became very important when we had the buy signal. First thing. So we've got some more weakness, but the market's not moving lower. There's the 78. Oh, we hadn't actually gone to the 89. We did that in the afternoon. That's right. Too much going on yesterday, back and forth from different charts. Right, now the reason I exited this trade was because of this and this, where we'd seen the markets move lower, and also we got the 89 on the downside in the daily chart. The Dow was starting to roll over at this point as well, and then we start to see prices move back. We got the sell signal, which is fine on this occasion. That's all marked back up, and then again off we go. And so what I'm doing, that's the 5-minute chart. I also looked at the 30-minute chart as well. So now I've moved the orange line down to that 89% in the daily chart as a target. There it is. So showing it, I'm having a look at it. I want to see what the market's going to do if it gets to this level. We've got the momentum to the downside. I got out too soon here as the market came back above the 5-bar moving average, because we then saw the market come back and trade down. So just a bit too keen there. There are many occasions when I've seen the market not actually trade down to that point. It's got within 10-15 points and then reversed very, very quickly. So, well, 30 points or 20, I think it was 28 in the end, is better than a kick in the teeth. But there is another 20 points on down to that level. And notice here how important it is to have the daily chart, because there's your stop at the bottom of the move. I've spoke about this before in the market alert. This is what you're looking for, this type of bar. And this is what I was on about here, is that you can be here as the market starts to come back. Before you know it, you're back to break even. So the 30 points is fine, but yeah, they actually took it down to that level yesterday. But again, it's there as a target. You can always take half off the table. You can always move keep dragging the stop down in a 1-minute chart at the 5-bar moving average. You can do all sorts. The tools are there to do whatever you want. So now you can see that we've come back to 89%. There are some finesse bars in here as well with buying pressure, etc., but I'm not going to cover those. But the market came back to 89, and then prices became more stable. We did get a reversal back there, but you'll see we get the final shakeout there, and then the market's free to move back to the upside. We had a potential sell signal back to the downside, but when you see this here, as I've spoken of before, when you've got this sort of activity going on, in particular this bar, because there seems to be a thing with the Dax where they have all the shorts come out at the same time. It's like it's manipulated as well. So prices then sideways. And we had another buy signal bang on 4 o'clock, but I didn't take that one. But if you did, there was the scalp and a few more points just in that. It ended up being a scalp trade as prices came back below the 5-bar there. Okay, so apologies, it's a bit of a long one today, but a lot happened yesterday, so I will cut it short now and say, as usual, thanks for watching. See you in the next one.